Hello to all our valued members. I'm Ben Squires, Chief Investment Officer here at NGS Super. And I'm here to provide a wrap-up of performance of both global and domestic markets in March, and what this means for our investment options, particularly our diversified MySuper option. Firstly, looking at global share markets, we continue to witness resilience off the back of positive economic news and solid company earnings. The US S&P 500, a leading indicator for global markets, rose by 3.2% this month, signalling that the US economy is still on a steady footing. This growth aligns with positive movements seen in the MSCI World Index, which tracks the performance of developed countries, which was also up 3.2%. However, it wasn't all positive, with China's CSI 300 showing a slight increase of 0.6% for the month, but down by 6.7% for the year, reflecting ongoing challenges in that market. Meanwhile, in Europe, the Euro Stoxx rose by 4.3%, and here at home, the ASX 300 grew by 3.3%. Switching our focus back to Australia and to our fund, the diversified MySuper option, which many of you are invested in, saw a healthy return of 1.8% for the month. This is part of a consistent growth trend we're seeing, with a 7.89% increase for the financial year to date. Our index growth option deserves special mention, with a remarkable monthly return of 2.95% and an impressive 11.8% for the financial year to date. Now, the major differences between our diversified MySuper option and the index growth option is the exposure to unlisted assets, which aren't held in the index growth option. The valuations of these assets tend to lag listed markets, however, over time are expected to outperform. Looking at the individual sector contributions to our MySuper option, Australian shares and international shares were the main drivers, contributing 3.49% and 4.99% respectively. It's these kind of numbers that can help us build a buffer in good times to protect us when markets are less favourable. But what's ahead? While there are always uncertainties, we are cautiously optimistic about our current position. Economic indicators suggest that there may be lower risk of recession in the immediate future, which bodes well for share markets. We're watching key areas that could boost our economic growth, such as strong household consumption thanks to recent tax cuts, and the possibility of interest rate cuts in 2024. On the flip side, we're mindful of the risks, including geopolitical tensions, which are increasing, and the up-and-coming election in the US. In Australia, the impact of the RBA monetary policy has positively brought inflation down. However, interest rate increases have not yet impacted employment. And with both the household market and superannuation returns being strong, consumer balance sheets are looking very healthy. In summary, we believe the conditions that have supported the strong performance of the share market will continue over the next 6 months. With that said, we are maintaining our allocation to shares while keeping our 4 main defensive levers ready. They are government bonds, commodities, and safe haven foreign currencies such as Japanese yen and US dollars, with a view to protect our portfolio against any potential economic downturn. Thank you for taking the time to listen to this update. We understand the importance of your superannuation, and we're committed to both managing it with both care and expertise. We look forward to bringing you more updates soon.